Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you're about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? GST comparison between Australia and India. Friends, there are 140 countries that have implemented GST, but with a touch of own unique flavor. For instance, in the United Kingdom, UK, the GST is called value added tax. There are many countries like Singapore, Canada. Now, Australian GST is pretty straightforward and with a single tax model, unlike Canadian GST, which is dual tax model that supports the central GST and state GST. Indian GST is adopted this Canadian model. Now let's talk about quick differences between Australian GST and Indian GST. The 1st of July 2000 was the day when Australian GST was rolled out. Indian GST was rolled out exactly 17 years later on 1st of July 2017. The turnover threshold for compulsory GST registration is $75,000 or $150,000 for not-for-profit organization in Australia. In India, if your business crosses the limit of turnover of 40 lakhs, that is 4 million Indian rupees, then you need to register for GST. The alcohol consumption has double tax as a Wine Equalizer Act in Australia, whereas in Indian GST system, the alcohol is GST exempted. EY, there's no such thing as EY in Australia, whereas in India, you need to generate for every invoice that crosses the limit of 50,000 Indian rupees amount. Self-generate invoice on vendor's behalf. Now in Australia, you can generate an invoice yourself with the vendor. If the vendor has not provided the invoice for some reason, it's called recipient created invoice. We don't see such practice in India. The input service distributor. There is something called as GST consolidated group that can have many GST with one GST head in Australia. In India, there's something called as input service distributor. A registered ISD can distribute the input tax credit across the branches depending on the available input services. The model. Australian GST model is single tax model, unlike Indian GST model, which is dual tax model. The tax rate is 10% in Australia, which is normally 18% at large in India. However, there are some taxation slabs. The unique ID required for GST registration in Australia is Australian business number, which is something like permanent account number, PAN card in India. Administration of GST is carried out by Australian Taxation Office in Australia. In India, we have GST department under government. There is GST Council, and the digitization is taken care of by GST Network, which is not-for-profit private limited company. Filing of returns is done through the business activity statement in Australia. In India, we have GSTR forms. composition scheme. There is no such thing as composition scheme in Australia. In India, to support small businesses for the intrastate transactions and the easy quarterly returns, there is 2% GST for composition scheme in India. What I mean to say here is, if your business carries out intrastate transactions, not the interstate, not across the states, so you don't need to register for GST. You can go for composition scheme, where you need to pay just 2% to the government. Now, failure to lodge categories. In Australia, there are different charges for large, medium, and small businesses. Whereas if you pay your taxes late in India, the rates are same, the charges are same, applicable to all types of businesses.
So, my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye bye.